Good morning, Monday, December 5th, market analysis, Stan Ehrlich. As usual, I start out with the S&P 500, the SPY, which is the ETF for the S&P 500. My favorite index, and talk about the DIA as well and the QQQs and sometimes the Russell 2000. And today I'm also going to cover some futures. I see two new signals in progress today. Also forex a little bit and sectors some. So this one's going to take a few minutes this morning. Currently 9:05 California time. Let's go. Remember that I had outlined the rally on the S&P 500, and I'm looking at the Q charts right now. Sorry about that. Let's switch off to the spider. Here we go. On Thursday of last week, I talked about it bumping against the only major bear trend line we have on the S&P starting on January 4th or 5th of this year, the beginning of the bear market, the top of the bear market, which we have a sell signal just a few days after. Our sell signal in the S&P was on, well, that's April. Let's not going back far enough. Here we go. Our first sell signal before the bear market really began was November 22nd, and the top of the market was January 4th. And that's also the case, I believe, for the DIA, which we have a bearish engulfing on the very high of the market. I'll show you in a few minutes. So for the whole year, except for the first day or two, maybe, we've been in this bear trend. We bumped against that bear trend line. That's bump number 4. So the trend line was already established after 2 points. And back in August, when it did the same thing, we bumped against the line. I talked about it being a top coming into the October lows, which worked unbelievably great this year. October 13th was a huge bullish engulfing and oversold condition, which is basically the makeup of my Ehrlich reversal. That's ER signals. When you see a green bar or a red bar, that's it. That's my signal to go long or short. Red's short, green's long. Simple as that. So we had a buy signal back here, sell signal April 5th. Not that many in the spider so far this year. And of course, the year's almost over. And a buy signal, a whopper on October 13th. Now we bumped against resistance, closed an old gap from a couple of months earlier, early September, hit a resistance level, hit that bear trend line, and we were almost overbought, not quite. I like to see it a little bit more than Wells Wilder's original 70. I like 75 or higher to be quote unquote overbought in my book, if I ever write one. New low today. Looks like we might have a chance for a new low close as well. Thursday was the high day, and it closed a tiny bit lower. It closed a little bit lower on Friday, but in an unusual way. It opened on its low, came back, closed relatively firm, but still lower than the previous Thursday, and that's last Friday. Today, we're down quite a bit, 5 points at the moment, and almost 6. And I like it. Obviously, I've turned bearish on the high day, Thursday. Go listen to my recording on Thursday. We have not yet broken the bull trend line running across the lows since October 13th. We need to break that, which could be today, although that's a little bit much to ask for. This week, yes. And remember, we're coming into the quote unquote Santa Claus rally. I have defined that in a very loose way so far, and we're going to sometime this week give you to the minute when you should be doing what. But basically, the Santa Claus rally is buying just before Christmas and letting go of your long position, selling out in the very first part of January, first few days of January. That's overall the Santa Claus rally. We pinned it down to the first 3 days before Christmas and the time of day to buy, and a method to get out of it in the early part of January that are not exactly like the traditional method, but it's an improvement. So that's the Santa Claus rally in a general sense. What can I say? So far, new low, below the low of the move since I pegged the top on Thursday. I like what I see. I need more evidence. I want it to drop, in particular, below 392 on a closing basis, and more, in order to be much more technically convinced that we have a top last Thursday of major significance. And when I say major, I do think that this could be the beginning of a move all the way down to the lows that were made in October. Next, DIA, Dow Jones ETF, daily data. We have a little bit in a no man's land, last Thursday's high. So that didn't mean a lot to me because of the price level. It did because of the overbought condition a couple of days earlier and a divergence. We're not overbought on that Thursday rally last week, but it was a few days earlier. That's a new high in price, but not a new high in the indicator. That's called divergence. And it's a little bit longer time frame as well. If you look back, the highest RSI level was October 28th, 31st. Okay, and give or take a day, right in that area. But the highs we've seen in the last couple of weeks were not higher than that reading for the RSI, again, back in late October. That's a longer term divergence. So I need a downside breakout. I need closing prices below 335 and a quarter approximately. And that should start another push down of speed and size, both. In other words, start to accelerate the decline, maybe into the Santa Claus rally timeframe, right around Christmas, just a few days before would be perfect. And starting to rally after Christmas into the new year would be perfect. I'm not bullish. I am bearish. I am looking for lower levels. I am looking for a very big move down, and I am looking for the lows in October to, generally speaking, be challenged. And there is a distinct possibility that we'll make lower lows. I don't think this bear market is over. I think we have a excellent chance of challenging the October lows. And I think it's probably going to be January, February, maybe March. We finally see a resolution to this bear market. And it could be a gigantic head and shoulder bottom, by the way. Your big shoulder could be the approximate May, June, July lows, which in itself, by the way, was a head and shoulder bottom that worked great. The head of the formation could be the double bottom that happened in October. And if we are only able to drop off to around 300 and a few points in a 2 or 3, 4 month time period, that could create the last shoulder. I'm speaking up about this way in advance. Let's just see how things pan out with this top. If I have picked one in the first place, I think I have. Next chart is the Qs. And I don't want to spend too much time on this because I want to get to futures in a moment. We got some brand new good signals, and good, I hope, signals and futures. We came close to the bear trend line, didn't quite touch it like the spider. Starting to pull back, almost getting lower than Friday's lows, right there, right now. And again, I need to see new lows for the last approximate 3-4 weeks on a closing basis on the Qs, like the DIA and the spider, in order to get a lot more convinced that we're going to challenge the lows, which are not very far away for the October 13th bottom. The Qs never did rally all that much. And therefore, we are a lot closer to potentially making lower lows for the whole year and more. All right, so obviously I am still bearish. Let's look at some futures charts. I'm going to roll through these like I typically do. I start with wheat because we had one incredible, great sell signal at the top of the wheat market back on March 8th. And also an excellent sell signal May 25th. And now we're getting oversold, no signals, but I wouldn't go short here because we're oversold. I think we're coming close to a minor bounce, which is going to come back up to probably at least 770, and more likely than not around 805. We'll see. Next chart. 10-year notes. Head and shoulder bottom formed. It was a little lopsided. I'm going to try something new. I'm going to pick up my little annotation device, little drawing device, and see if I can't draw something for you. Yep. Let's see if this works. So here's the first shoulder low, big fat, and the head and the last shoulder low as well. The neckline is this blue line right here. It broke out on that day exactly and went straight up to its minimum upside objective, which it reached, and now it got overbought Thursday of last week. Friday, we had an outside trading range, although it closed higher. There's something to be said for a outside trading range in overbought conditions, and we're starting to work our way lower. So let's see if I can erase those lines. Excellent. Next chart. Now, I've got to take the mouse and go back to, oops, just a second, please. Okay, we're in business. Next chart. Here is the 30-year long bond, same formation, same minimum upside objective was reached about a week ago. And now it's bumped against on Friday, beginning of resistance, the low that we had, which was a buy signal, back on June 16th. And then we had a great sell signal on the top of this market until the low that was made with the bullish formation, not a signal per se, unfortunately, on October 24th. So I'm overbought. I reached resistance. The upside objective has been fulfilled on the bottom formation. I'm looking for this thing to start to slip right back down again. Next chart. Got to go a little quicker here. Coffee. We picked the bottom last week and a half ago to the day. That's what the ER signal is built for, picking the turning points, the high of the move and the low of the move exactly. We don't pick them every time, but we get plenty of them. Next chart. And so I'm friendly for the moment on coffee because I picked it low and I don't see anything overbought momentarily. I think we're going to work our way back up and maybe get a little closer to 180. Next chart. Pick the top on the high day. Red signal, cocoa. Got overbought in the last 3 days, starting to come down significantly today. I'm looking for a low the low recently on November 23rd to be broken. Next chart. No signals recently, but a little double top, overbought in both cases, and I'm looking for a little bit lower levels. We did, of course, get in platinum, the top of the market way back in March, the high for the year, and close to the low, but not quite, unfortunately. Next chart. This is high grade copper. Grabbed a good buy, a little overbought at the moment. I'm neutral to maybe a little bit of slippage. Next, pick the top of the market with this trading algorithm, and we gap down into oversold condition today. That's not a good place to be going short. Gaps are almost always closed, so I'm expecting it to rally back up to Friday's low soon, probably this week. Next chart. Soybean oil also getting oversold the last 2 days, Friday and today, and dipping back into some support. I'd be looking for a bounce here. Trend is pretty much sideways. Next. Corn. Got a couple of buy signals that did not work out. They never did make higher highs. And so there was a very small profit or very small loss, one or the other, depending upon how you handle the signals. And Friday, we started to break down, and today we're breaking down even more, but we're oversold. Don't go short in an oversold condition. Look for buy signals. Look for reasons to have a low risk. Use money management every time you make a trade of any kind. Low risk, buy, but I don't have a signal, so I'm not anything but looking for a little bounce. Next chart. Soybeans. Neutral. Sell signal didn't work. Not too much to say here about beans going sideways. We had a good sell signal A few days ago, dropped off for a few days sharply. I'm neutral to a little bit bearish here on this chart, and this is sugar. Caught that top exactly, and we caught this one almost on the highest high. Next, what is this? OJ forming a pennant, sideways, overall trend is up, looking for higher levels to a modest degree, nothing particularly special there. That did not work. That was a very good short sale signal. That one did not work. It was a buy, but it didn't go up. A new short went straight down, and that's a new short and went down a little bit more. So not the greatest, but some good signals. Good short signal there. Now we're overbought. I would be looking for new shorts on soybean meal. No signal at the moment. Next, we had a buy signal last week. I think that looks like Tuesday of last week, and today it's now below that low. So it only worked for a day or two. This is heating oil. We did almost pick the exact high, missed by 2 days on November 8th, sell signal. We got the first low of a double bottom in here on September 19th, and we got the high for months before and months afterwards back in June on heating oil. A couple of darn good signals in there and big moves as well. Next. Nothing to say here. Live cattle, resistance, probably sideways to maybe a little higher. Next, E-mini, S&P. Obviously, October 13th, we picked in a heck of a lot of symbols. We normally, by the way, with the ER signal system, automated trading system I developed over the last decade, get a few signals a day on the average, 5, maybe 10. On October 13th, we got 98. That's how profound this is. And we only track stocks that are between $20 and $100 on a closing basis. So there's a lot more than 98 if you're looking at closes that are over 100. We just don't bother with them at this particular point. We will someday. Next, got the top of the market on that rally high and a very broad double top. What is this? Crude oil. Got a little oversold lately and popped back up into resistance, now starting to slip slightly. I'm expecting it to drop off a little bit more, probably start to make new lows. The longer term trend is down. No buy signals recently, and we have some sell signals, especially 3 of them all clustered together back in early June. Next chart. Gold, brand new sell signal this morning. As long as we stay lower than yesterday's close, I'm going to have a red ER sell signal today. This is the beginning, should be, could be, I hope, I expect, of a down move. It could very well and very easily challenge 1637, the triple bottom that we had, and we did catch the first low on that triple bottom with a buy signal. So I'm turning bearish as of today, and gold, period. My protective buy stop or stop loss, I don't like that phrase. I like protective stop, same thing, would be just above today's high at this particular point, and to be moved down very quickly. The system automatically does that for me when we're using 1-minute charts and loading and showing you the ER3 and ER1 trading systems, which I have not done yet. In the last couple of months, I've been showing you the daily charts and the overall signals in general and how they pan out. Next. And silver. Both gold and silver have sell signals today so far, and it looks like they probably will stay that way. So I'm still bearish on silver. Same statement, looking for the major support area around 18 and a quarter to be tested. So obviously I'm looking for something below 21 real soon. Give it a week or two. Next chart. Live hogs. We grabbed the bottom on Wednesday of last week. I said so at the time, on the day it happened. So far, so good. Up every single day since that signal, including the retracement you would need the little green dots in order to go long, almost at the low of the day the next day. Great, perfect so far. I'm looking for higher levels. We're not that overbought in the 60s, so there's elbow room to get up to, I don't know, maybe 94 this week, the next few days. Yeah, that's quite plausible. Next chart is wheat. We began with wheat. We're going to go now to forex. The euro dollar. We caught the bottom of the euro dollar on September 28th, and we have a bad work for a day or two sell signal on November 2nd. And we are starting to work our way into historical resistance price ranges going back into April, May, June. So I'm thinking it's going to peter out on this rally real soon and start to drop back down again, which hasn't really happened to any significance so far. Modestly friendly to probably a little on the neutral side, to be honest with you, in the euros. Let's go with the DX. We should be the exact opposite, which we are. We caught the top of the market in the dollar index, the DX, and so far we have a lower low, the lowest low just on Friday. Today's an inside day, no higher, no lower than the Friday's high and low. The next one is the dollar yen. Caught the top of the market in the dollar yen on October 21, the high day. And again, that's why I've developed this trading system. That sell signal didn't work very well, or it didn't work at all, frankly. That means you probably had a small loss. There's also a chance that there could have been a profitable trade there. I don't want to go into that detail at the moment. We caught near that bottom here. That's a good sell signal. That made a little bit of money for a day or two. That was a good sell signal for a couple of weeks. Next chart is the Aussie. We got the bottom to the day, October 13th. A couple of days later, we have two more back-to-back buy signals, and we have been essentially going up with a couple of minor corrections since then. A couple of months worth now. Heck of a good move. Big bearish engulfing today at the moment, but we're not overbought. Therefore, it's not an official sell signal, but I certainly don't like the looks of it. I'd be going flat, neutral, not much to say at the moment there, but I'm a little concerned that looks like a sell signal. It's not official, not an ER signal. Canadian dollar caught the top of the market, caught the last little rally to the upside. Modestly friendly for the moment, but you've got some significant resistance that you're starting to bang into. Two more. Swiss franc, dollar Swiss. Historical support is trying to hold, doing an okay job, but we just haven't had a very good rally. Bumped against this support levels at around 0.9367 area, and we're a little higher today, inside trading range. Nothing particularly fantastic here. I'm a little neutral to bearish, frankly. No signals. We caught that bottom. We caught that top. We caught that bottom. A few other good signals in there as well. And lastly, euro pound. Nothing great lately. I want to touch on the sectors real quick before we finish up today. I'll go to the top of the list. SMH. Nothing happening today, but we did catch the bottom October 13th. Next, XLK. Caught the bottom October 13th, and we caught the top right there August 16th. Very profound signals, often for stocks, commodities, indexes, sectors, forex, you name it. It's the way and the underlying reasons why I built this trading system for the last decade plus. Next symbol, XLY. First low on the double bottom, we caught that. Didn't do much, made some money, not a lot. Not too much to say here, kind of neutral at the moment. XLF, nothing lately. Sell signal that only lasted a day or two. Again, that could have produced a small profitable trade, but it certainly wasn't what I like, which is bingo, the top of a big rally and the beginning of a big break to the day, February 10th. And also January 13th. A couple of whopping signals at that point on those dates. Next, XLI. See, I don't care what sector they are. I only care about the signals they're generating and the chart patterns. I'm a quintessential technical analyst. I don't want to know the fundamentals at all. I'm sorry, fundamentals. That's my little coined word, fundamentals. You won't know the fundamentals until after the fact. They're kind of like ancient history by the time the general public finds out about it. Insiders may be able to make use of that information, but I'm not one of those. I just want to follow my trading system. I got nothing to say really about this particular symbol at the moment. Let's go to XOP. We caught the high day recently on November 14th. And here it is, a new low and a new low potential close since our sell signal. Bingo. Next one, GDX, gold mining stuff. I was kind of hoping I'd find a sell signal today with the gold having one, but we don't. We did have an exhaustion gap and almost overbought, not quite, super close. A sell signal a couple of weeks ago, but it will only last a few days. So nothing particularly spectacular here. I tend to look at the tops and bottoms real quick just to see if I can find, some red and green. And I didn't. OIH, we like the red, smack on top here, November 14th. And a bearish engulfing today probably means it's going to start heading south again. Yeah, okay. XLB. Nothing super great here. Love the red on the top of that rally, in the beginning of a huge decline. XLP. Nothing today. Bad sell signal a few days ago that didn't work. An okay one a month or so ago. Don't see anything particularly great here. We stopped at resistance last week, and I kind of expect to see a little bit more of a dip down, but I'm not too sure about that, so I'll kind of pass on it. XLV, same kind of comments here. Nothing great. IYE, we had a head and shoulder top, small one, not very noticeable, not very profound looking, but looks like it's about to work. Here we have a new low and a new low close potentially, excuse me, since the last rally high, and that was the shoulder on November 22nd. The downside objective at a minimum is 43. So here we are at 47.68. Pretty good move. And that's exactly what I'm forecasting, 43 and or lower. The objectives off of chart patterns are typically minimum bullish or bearish objectives. They oftentimes go much further than the objective off the pattern. The pattern, so to speak, just gets the big ball rolling. Next. And lastly, XLE. I didn't draw it in, but there's the same head and shoulder top formation, and the neckline could be across these two lows, downward slanted somewhat. And everything I just said about that previous symbol is also applicable to XLE. The same thing I said about IYE. Okay, that's it. You have a great day. Thank you very much. See you tomorrow.